Merci beaucoup à l'organisation NFT Paris pour son invitation. Pardon pour mon français. So, thank you very much for having us today here. This is Silvia Mogas, and I will be moderating today the panel about decentralized finance and investment, empowering global economies through DePin. So, first of all, I'm going to introduce myself. This is Silvia Mogas. I've been in the blockchain space since 2019. I'm former CMO of Envoy, former head of marketing of Fair Labs. I launched different NFT collections and different tokens. And since 2.5 years ago, I started Blockchain Marketing Boutique. It's a full-stack marketing agency that will help Web3 projects with marketing and PR. And also we help traditional companies to enter to the blockchain space. So now it's a turn of my amazing panelists. I would like to introduce yourself to our audience. Please, Rob, can you introduce yourself?
Hi, everybody. Rob Schmults. I'm a general partner with Blockchange Ventures. We're early stage venture, been investing in the space for about 8 years. While we're not a DePin specialist fund, we've probably done over a dozen investments to date, including Filecoin, Nadix, Silencio, Spexy, and a number of others.
Hello, my name is Begliarov. I'm the board of directors of MPM Labs, and we bridge companies from Web 2 to Web 3, and we help companies from Web 3 to have exposure into the Web 2 space. So.
Hello, I'm Robert. I'm from 1KX. We're also early stage venture fund investing across the space, but also heavily on DePin. Yeah, my role is a researcher, so very much economics focused, mass, token design. And yeah, that's also why my research is very much focused on the tokenomics of DePins.
You can see we have level here. So let's start. And I want to start with the basics. What is DePin? DePin stands for Decentralized Physical Infrastructure Networks. Can you explain us, under your words, what is DePin for you guys? And also, if you have any cool example that you can explain to our audience?
Okay, I'll start. So the protocol I'm most excited about right now is LIT protocol. Decentralized key management doesn't sound very sexy, but basically, right, you need a bunch of like, wherever you want to go with your wallet, where your investments, you need the keys, and it's very clunky to use. What if, you can basically outsource this to some decentralized, entity you can trust? That's basically what LIT enables. And it helps all these like Pump.Fund, Trade Genius, like trade abstraction platforms, but now also all these agents, right? They also need wallets and they can't handle their own ledger. So that's why they can leverage infrastructure like LIT. And yeah, this is what decentralized physical infrastructure is for me. It's like what the name says. You have physical infrastructure, storage, compute, weather sensors, whatever. But it's decentralized. It's not run by like some centralized entities. It's all over the globe, wherever. But the secret sauces, then they are connected through a network. Typically, you have some tokenomics on top to orchestrate all of that, and yeah, that makes the thing so magic. But yeah.
Thank you.
I mean, I agree with Rob, and it is fascinating because it is in a world of where you can achieve a lot of things, a lot of ways where financially you can't achieve in the Web 2 space. And that is the idea of bridging these two gaps together, because you need the help of one another to unlock, let's say, your full potential. Because in the Web 2 space, we see a lot of giants controlling the place, where Web 2 and Web 3, there's not much. So this is a place where you can grow and find your length, let's say.
Yeah, I love David's point about the fact that DePin may be the place where we successfully bridge Web 2 and Web 3, with a business that sort of the non-blockchain world is willing to pay into for the service or capability that DePin's providing. Just to kind of build on the definition a little bit, and then I'll name a project as well. I think just if you boil it down to the pure economics, what's really happening with the DePin project is that what's normally CapEx for a business, capital expenditure for a business to, say, buy a whole bunch of GPUs or assemble whatever it is the capability that they would normally have to pay for out of their own funds, they're pushing that out onto the network. Now, that doesn't mean that cost has gone away. It just means they've converted it to an operational expense, so an ongoing expense. And yes, in DePin, often that expense is being paid for by the consumption of the service, or at least hopefully to get a working market, that's what will happen. But I think we shouldn't pretend that the cost went away. It just got shifted. So I just add that to the definition. In terms of a project I'm excited about that maybe doesn't, I'll pick one that maybe doesn't get as much attention as, say, something like Helium, is Spexy. Has anyone here heard of Spexy? Raise your hand if you have. So, oh, okay, great. My panelists and like 2 people in the crowd. But Spexy is a decentralized network for drone data, so geospatial data. And what I think is so interesting about that is by collecting it via drones as opposed to satellites or fixed-wing aircraft or even vehicles on the ground, is you get a faster, better, cheaper solution. And there's a massive, massive market for this data already. And so I think Spexy tapping into a DePin architecture to unlock that market, it's just a really powerful combination.
Thank you very much for your insights. I have another question. We are building a lot of technology, infra in the blockchain space. And what do you think is the main challenges that we are facing for DePin in this case to get this mass adoption?
So for the mass adoption to apply, there must be like incentives behind the infrastructure. So to allow incentives, you should have a really good project that's happening in the Web2 space, because let's say it again, DePin is actual physical infrastructures coming from this world into a new customer segment. So how will these customer segments buy your product or be another technological impact for you as well? Well, you have to give them good incentives. And like DeFi, we learned that incentives are built upon rewards, upon rewards, upon rewards.
Some gamification.
Exactly. And that speculation is just a speculation. But now we actually have a physical network. We have a physical infrastructure and network, things that are happening in this ways, like what you said, like they were using it for farmers as well to space out the land and to understand how much square meters you need to do. So all of these things are applying in the physical world, but this time the users are getting rewards for it. And that's how I think you build more demand, because already there's a lot of supply. You just have to find the right demand for it.
I don't think what I'm going to say is in conflict, but I think sometimes we forget in the Web3 space that if you want demand, you actually have to build a product or a service that people want. And I think sometimes we sit back and I heard someone on an earlier panel saying, oh, DePin's the way you bootstrap supply, which is true. But it does, just because you have supply doesn't mean you have demand, right? So a marketplace is an exchange of value between the buy side and the sell side. And I think too often we forget that we also have to build demand. And classically, the way you do that is you build a product or service people want. You then make sure they know about it. You build awareness. And then to your point, you have a pricing structure that they feel the value exchange is fair. And DePin on its own doesn't automatically create demand. And so I think we actually need to go and build demand.
Yeah. Robert?
Yeah, just the last point. I like the incentives. I like this, demand.
Let's grab
but
up.
then the point that we also learned from DeFi is it needs to be usable. Because I don't know if anybody tried to store stuff on Filecoin on Arweave or I don't know all the other things. So this is the point where I feel we see it in DeFi even now that there was a hump of adoption because people felt like, okay, I get something and that's why I go through the pain and using it. Now this gets abstracted away and this will drive more adoption. And I feel like with DePin we probably see the same. I mean, it's very early for the whole DePi or however you call it, but more adoption, more usability also is something that will hopefully help the demand side.
Great, thank you so much for your insights. Now I have a question for Robert. He's an expert in tokenomics, and he has just published a co-joint piece in Mesarin. I want to understand what are the main things that you think that tokenomics are doing that well. What would be your advices for founders building their tokenomics? And also how you leverage artificial intelligence to make it better?
Yeah, I would say if you look at the tokenomics of DePin, I mean, DePin itself is super young. And so, it's a lot of experimentation. And I think that the major advice that you can take if you build a DePin right now is just look at what has been learned already. You don't need to make the learnings again. And this is goes to the whole incentive and supply ramp up, right? If you look at Filecoin, Helium, I mean, when these guys launched their networks, they didn't know if people would just, put hotspots in their homes, and that's why they put a heavy price on it. And guess what? If there's enough money out there, people will do anything. So we learned that lesson, but the networks paid a lot of their tokens for that, right? And this is something of the learnings early on. I mean, not sure if the educational price they paid, whatever. New DePins don't need to pay the price. Everybody knows, meanwhile, what DePin is, how it works. And that's why I like a lot that networks more and more become more sophisticated and more willing to experiment on how they start their token designs, right? One example right now is, for example, BitTensor. Can argue if it's a real DePin or not, but put this aside, they have these subnets, and they can do a lot of things. They can basically provide storage, provide GPU, but also provide AI models or provide even prompting services, 3D images, whatever. If you start with too complex tokenomics right away, and especially too much speculative-driven frenzies, like we see with AI agents right now, you probably kill your product right away. That's why they started very much like, okay, everybody gets some incentives. It's very easy to understand how it works. Come and try it out. And then they tried it out, and people come. But obviously, this was a lot of cases misincentivized, right? Because providing a trained model is way harder than providing storage, I would say, right? But when they get the same rewards, that doesn't feel fair, and that also doesn't play out. That's why yesterday they launched the dynamic TAO system, way more complicated, but at its core, it's staking-based curation, which means like everybody can put their money where their mouth is and basically start going into it. If they would start it with this thing, A, people would probably not adopt it because it's quite complicated, but also B, this thing drives more speculation, which is good at a later stage of your product when you actually have something that works. Whereas if it's all about like what it could be, typically speculation is too crazy and kills it. And yeah, maybe to the AI question, to which extent AI can be used, I would say I would be careful in the tokenomics design and everything. Yes, you use simulations and everything, but I wouldn't call that AI, so to speak. It's more that I think where it is really useful is when it comes to governance, when managing parameters. We see this in the DeFi space again, where a lot of lending protocols use that. I recommend a lot of governance, community management. I mean, all of that thing is stuff where less biased automated AIs can actually help make you better progress and better adoption.
Thank you very much. I have now a question for David. He has all his team in front of us. Thank you for coming. And he's building...
You feel the nerves, sir.
Thank you for the support. He's building the bridge between TradFi and Web3, and also he's an expert about real-world assets. I would like to understand, under your point of view, how do you envision this to reach the mass adoption? Because I build that as well in my company, and I can tell when I talk with traditional companies that there's still a long way to go. People still need to understand better what's blockchain technology, that blockchain technology is not just crypto. So I would like to understand your point of view.
So exactly, this is true. It's a really big challenge because when we talk to Web2 companies and we talk to Web2 businesses, they are very traditional. They are very scared of how things operate in this world. They think crypto is equal scam. So how can you communicate to them and tell them, no, this is actually solving a lot of problems for you. This is actually solving challenges that you cannot solve in the Web2 space. And the challenges that we see here in the Web2 space is maybe liquidity, capital growth, and competitiveness in the market. So how does this solve? The DeFi obviously helps the fact of liquidity, because you enter a market that is a 350 million plus users with a $3 trillion market cap, and that gives you the point where, okay, this is a new market, I don't need to challenge the market that's already existing in this world, and I can achieve new people investing in my company. So that is just like a parallel structure to what you already have. It's not replacing what you already have. It's a parallel structure of what you have.
I totally agree.
Exactly, and that's one. Number two, it's competitiveness. You don't need to challenge Google. You don't need to challenge Meta. You don't need to challenge Facebook because these are giants and they have enough of resources to create and replicate what you already have, or maybe even buy you out. But now you have a chance to operate in a world where they are not really touching a lot because of governance, because of compliance, because of regulations that we will talk about later. So this is the challenges I feel Web 2 is entering Web 3, but these are the solutions we try to address them. Now, obviously there's challenges as well in the Web 3, like for example DeFi. As I was saying before, it's a speculation on speculation, money on money on money. But now, so the collateral here was money, but now the collateral is an actual physical infrastructure in our space, in the real world, where we can see what they're actually doing. We can see what is their actual impact on the environment, on the finance, on the economics. So when you have these two great ideas, a good product and a good collateral, why wouldn't you incentivize? If I'm rewarding you for everything you're doing, why wouldn't you incentivize? So that's the idea. Demand, user demand drives more revenue, drives more token demand, and drives more infrastructure expansion. And that's the way we try to communicate to Web 2 users. That's the way we try to show them that this is a clean path.
And it's a totally different customer journey as well.
Yes.
Because we need to understand that a Web3 person is going to have one customer journey, and the traditional companies, they need to adapt the user experience to make it more friendly.
Yes, and more understandable.
Exactly.
Because not everyone is from our Web3 space.
And now I have a question for Rob. We are very lucky to have him here. He's a VC very experimented, and I would like to understand your insights and just said, what are your green and red flags for investing in a project in the DePin stand?
Yeah, I mean, I wouldn't say we have specific DePin red flags, right? They kind of apply to any project. So we're going to evaluate a DePin project just like we would anything else. Is the team great? Does the business make sense? And is the potential market that they're creating or unlocking massive? So that's oversimplifying, but that's kind of quickly it. So I already kind of talked a little about this. If we see a team that just has an idea around supply but doesn't have a sense of how they're actually going to drive demand or who's going to pay for what they're bringing to market, that's obviously a big red flag. I think DePin's interesting, sort of like my co-panelist said, in that it can be a bridge to Web 2. So that creates actually, in some cases, an extra hurdle to get over for a team, which is they not only need to understand sort of Web 3 dynamics, but if they're going into a certain market, if they want to disrupt Uber, for example, or they want to disrupt cloud storage or what have you, they better understand that market. So just understanding Web 3 and not understanding the market that they're seeking to create or disrupt is a real red flag for us in regards to DePin projects. In some cases more so maybe than others. And then, I think both of those are intricately linked to team, right? So the team is who has the understanding. The team's the one who has to demonstrate that they're going to be able to drive demand, whether it's B2B or B2C. So hopefully that answers your question.
Of course. Thank you so much. And now another hot topic, regulation. We need regulation. We don't want regulation. I'm from Barcelona. In Europe, we have Mika and Dora. And then I'm based in Dubai, and in Dubai we have Bara. So we need a global regulation to have all the markets the same regulation. We need to have more localized regulation. It's a barrier of entrance for mass adoption, or it's going to help the mass adoption. What are your points on this?
I'll just say something quick and then pass it off to my colleagues here. I think a clarity around regulation is going to be critical certainly for enterprise adoption, right? And given that a lot of DePin is targeting the enterprise market, some of the challenges that, David, you're probably up against are the fact that if an enterprise is required to take tokens to consume DePin and the regulatory regime won't let them do that, that's a big problem and could be a huge blocker, right? So I know as an industry, we tend to be very anti-regulation. I think we need to get over that and understand that smart regulation is probably better for not just business adoption, but probably ultimately consumer adoption as well.
I 100% agree what you were saying. It is a huge, huge hurdle, but you can see this hurdle as a positive and as a negative. So first, before saying what is the positive and what is the negative, I want to say that in Europe, for example, because we're in Europe, MiCAR, for example, is the harmonizing regulatory of all the European countries. So before that, like say last year, each country, like Spain, like Italy, like France, they each one has their own regulation. And once you're regulated, for example, in France, it's called PSAN. Once you're regulated there, it's hard for you to be regulated in Italy because you don't have the same exact name. You have to have another one, and then you have to open an office in Spain or office in Germany and office in Italy. And the German one is the hardest one. It is BaFin. So when you have all of these hurdles, it limits you to one European location. Now with MiCAR, if you're regulated, you have all the European horizon. So you can work and operate all in Europe. That's a good thing, but it also is a challenge. Why? Because it's a tough regulation to be regulated under, but it also qualifies you as one of the best. So if I have company X that is regulated by MiCAR and company Y that is not regulated by MiCAR and it's only regulated in France, I say, oh, company X is legit. It's the real thing. It's the good thing. So it qualifies you, makes you in a star position, but also it's a challenge to be there. But like you said in the beginning, a good project, a good company should be good. That's the idea why we're here. So.
We were talking earlier about this, no? That we need to build sustainable projects that they are solid behind. And if we have a regulation, we know that they are going to be solid. But I have something to say as well. If we regulate too much, we stop innovating. So
we start being more centralized. That's the problem.
And and we need to innovate. We need to be able to try things. And we are regulated constantly. We cannot innovate. Do you want to add something else, Rob? Are you okay? Perfect. So I'm going to jump to the next topic. Digital identity. I'm a marketer, and I truly think that digital identity is going to be one of the next big things, because you are going to be able to attach all your assets to your digital identity and also to be able to be anonymous, because we use technology zero knowledge proof, and this is going to allow you to don't show your identity, but to be able to say, yes, it's me. What is your point on this in DePin? Do you think that it's going to help DePin adoption, or is going to be to make more complicated everything?
I mean, it's probably a little bit different when you look at supply versus demand. I think on the supply side, it for sure helps. And you see it, for example, IoTex, IOID is some initiative that works that well. Why is it important? Because, yeah, you know, if you say anybody around the world can provide their GPU, or everybody can provide their solar panel, and we collect the energy they generated, how can I trust that they do it, right? There's you know, all sorts of like protocol level workarounds. Yeah, we have TEEs, and we do this and we do that. I mean, solar panel energy providers, they send people to their homes to inspect, like, yeah, the solar panel is there, we saw it. This doesn't sound very scalable, and it's not, right? That's why it is needed that the devices have identities, because that also unlocks a lot of like cross-protocol usage and identification and all this like agentic economy that needs these supply-side IDs. When it comes to the demand-side IDs, I mean, I don't have a strong opinion on that. I mean, we live in a world, Web 2, where basically, you know, anything you use, your identity is there. You need to try really hard to be unidentified. I obviously would love to change that, but also it's beyond my capabilities to tell you how, but I don't know how you see it.
No, they track everything we do. it's clear. For digital identity, I feel it's a step in a good direction and also in a worrying direction, because not everyone wants to be associated with everything they have. Like, if I want to go to the hospital, I don't want all my assets to be there as well on my profile. But also, it also solves the ability that if you want to, you can. So there's that complex. Germany, I know that Germany is already trying to adopt this with self-sovereign identity. Yeah. They're working with Deutsche Bank to do it, and they're doing a good job about it. I see other countries also following its lead, but I feel like it's a 3 to 5 years time, because it's a lot of data and a lot of adoption. You need all of these big institutions, big banks to believe in the blockchain in order to do so. And there's also privacy and all of that.
Also, these companies, they have to talk between each other to have compatible digital identities, because then you are going to end up having thousands of identities. So we don't want that.
Yeah, I mean, real quick, I think the answer is going to be it depends, right? So just like in the physical world, to say get into a bar in the United States, you need to show one level of proof, versus to get a trading account at Charles Schwab, you need to show different levels of proof, versus become an Uber driver, that's yet another set. So it'll depend, but there'll definitely be cases where we want identity, and some cases where it'll matter less.
Great, great answers. And now I'm going to ask for some alpha. Most of you, I suppose that you are going to try to invest for the next big thing. So I want to ask to my experts, what are their advices in the DePin area? What do you see that is going to be the way that we should invest? Not financial advice, I have to say, it's a disclaimer, but what is your point of view?
Yeah, I mean, definitely not trying to give financial advice. So
we have the big disclaimer.
Look, I think a lot of the great markets, if you think back, that have been created by technology, you almost can't predict them. Somebody did, but it's often that one founder, that one person who predicted them. So, but as soon as you see them, you have that reaction of, oh, I can't unsee this. Like, it makes so much sense, even if you were not able to think of it before. And so if we think about pre-blockchain DePin projects like Uber and Airbnb, right? I'm pretty sure I would have never come up with those, right? But now we just take them for granted. I would say if you see something that you can't unsee, that DePin or otherwise, that means it's probably pretty interesting. Obviously do your research, but that might be the filter I would use, just to give something general.
Thank you.
I think that's a great solid point. Like, if you have that wow factor, you will have that wow factor. And honestly, I see, like, in the narrative of RWA, like in the narrative of having something that is existing, something collateral, something that I can see and physically understand, and I can invest in it as a small person, I think that's the way we're gonna go for the next 3 to 5 years. That's all I have to say. I'm waiting for his alphas.
Thank you so much. Well, he's the economics.
Yeah, I mean, economically speaking, there's two things that I'm very excited, but they're not too exciting, I guess, for you guys. It's just the demand side that DePins bring that come from Web 2 to Web 3, actually, right? Because if you're not the leader in Web 2, you can still disrupt your competitors basically by going on Web 3 rails. That's something I truly believe, just because the DePin economics are so different from your centralized Web 2 economics. So that's the one part. And the second related one, I mean, you said RWA, right? But this is the crowdsourcing of infrastructure and basically the decentralized ownership of infrastructure, and then also the financialization of that. I mean, right now, if you look around, data centers, fiber, and all this like infrastructure that's just sitting around basically, and it's not, yeah, I mean, sometimes it's used, sometimes it's not. There's so much huge potential in being able to having a fraction of share and then making this investable. Not sure if this is DeFi or DePin, but it's for sure something where I feel like, okay, this is gonna be big.
Thank you. We don't have many time remaining, but I want to finish, all my panels, I like to finish with this. So in 1 minute, can you tell us an advice to a founder that they are starting in the industry? What would be your advice in 1 minute? Experiment,
break things, learn. And that obviously means, don't
do a lot of mistakes.
Yeah, exactly. I mean, don't beat yourself up if you fail. It's just like it needs iteration. Like, there's probably no successful protocol out there that hasn't pivoted at least once. So that's my advice. And also when we set up economics, right, this is where we want to set it up in a way that you give yourself enough room to basically change course and be flexible.
I think there's a lot of times you're going to be in a room, you're going to be in a call, you're going to be in a meeting where you say, this is it, this is going to work because it makes sense, everything makes sense. But unfortunately, you don't control two sides of the same coin. You control one of the sides. So sometimes it's not your fault, sometimes it's not you not doing the good job is simply does not work. And that's okay because it happens again and again and again, and then you need that one time it will. And I feel you just have to keep waiting for that one time.
And keep going.
And keep going, yeah, exactly.
So I love both Robert and David's advice. I would add maybe a kind of a macro thing, which is don't start with the blockchain and then go looking for a problem to solve with it. Start with identifying a problem or an opportunity and then figuring out how to solve it. And maybe the blockchain's the answer or part of the answer or not. But certainly I think I see a lot of teams who say, oh, I read the Bitcoin white paper and then I set out to figure out how to apply blockchain to area X, right? And I feel like that's backwards. I would say some of the best teams we've invested in all started with a problem or an opportunity, and they were trying to figure out, how do I solve this? How do I make this work? And then they found the blockchain and said, oh my gosh, this is the unlock. So I just encourage people to make sure you're starting at the right end of the problem set, and then figuring out the solution versus picking up a solution and trying to find a problem.
Thank you so much. Merci beaucoup à tout le monde.